Let's talk about a major grocery chain, Whole Foods. It's out with its earnings after the close today. It's the largest natural goods grocer in the U.S. And joining us now from Richmond, Virginia is Andrew Wolf. He's a senior analyst at BB&T Capital Markets. The Financial Times StarMine World's Top Analyst Survey ranked him second in food and staples retailing last year, and he rates Whole Foods a hold. Andrew, thanks so much for joining us.
You're welcome. Good to be here.
So let's talk about rising food costs. I mean, when you look at a Whole Foods, this is a grocery chain that obviously its price point tends to be above others, even to begin with. What effect is this going to have on their margins that we are seeing food costs go up?
Well, that is the big issue, to be blunt, in the food retailing space and really in the whole supply chain. But the way I look at it is Whole Foods fundamentals are really strong. They're fully recovered. They're gaining market share at a terrific clip. 6-7% increase in customer traffic. That means customers converting to coming to their stores, likely from another store. So if any retailer is going to have pricing power, in other words, the ability to pass through rising product costs, it's going to be Whole Foods. But the devil's going to be in the future because we don't know yet. We're just starting to see a lot of these rising product costs hit the retail channel. But I would bet on Whole Foods being able to pass it through. In the past, they've been able to do so. Now, the past, things are a little different now, but the natural food sector is a lot like it was pre-recession. The customers are back, and they're spending really quite liberally. Matter of fact, a lot of their customers are starting to actually trade up to more expensive items. So you
think actually, if at a Whole Foods compared to a Super Value, for example, or another grocery chain, that their customers are paying less attention to price and more attention to product, for example?
That's exactly right. Now, I wouldn't take that to the extreme. This isn't 2005 where, folks are coming out of Whole Foods with $100 bottles of wine like they were back then. There is a shift, but certainly Whole Foods' customer is a customer that can afford to and is starting to trade up maybe to a $30 or $40 bottle of wine, to use that analogy.
So all of this said, I mean, when you look towards the earnings report today, let's take the stock and the context here. The stock, I mean, the returns have been amazing. It's up something like 500% from its lows. It's trading at a 3-year high. I mean, what do they have to say today to keep that momentum going?
Well, there's a lot of momentum in their fundamentals, which means a lot of momentum investors are involved in the stock. So you're right. They're going to have to beat. They've beat, many quarters in a row now, so I don't think that's surprising. That's probably what's in the numbers. I think what they're going to have to say, frankly, is two things. One, that they're still gaining a lot of customers, and therefore their same-store sales guidance is going up because their customer count, their pure market share, they're taking even more market share. That'll get investors continue to be excited about the stock. And secondly, as you let off about inflation, if they can say, yeah, we're seeing some inflation, but we're passing it through, and our customers aren't reacting to it. They're still buying the products. They're not changing their behavior. That'll be a positive because when a food retailer can pass through inflation, helps their sales and their earnings a lot. It really leverages all the fixed costs of the store. So if they can come out and say those two things, customer counts are still strong, and we're passing through inflation without any change in consumer behavior, therefore margins aren't going to be affected. I think that'll be good for guidance and good for the stock.
Well, speaking of guidance, do you think Whole Foods is going to raise its forecast for earnings for the year? And do you think it needs to, again, in order to get a positive stock reaction?
Well, they actually mentioned when they set their guidance that it was exclusive of inflation. So like I said, if inflation comes through and they're passing it through and nothing else has changed, everything else being equal, they are positioned to raise their guidance just on that. So it remains to be seen, but I think based on inflation and what I think is going to be their ability to pass through guidance, I wouldn't be surprised if they'll be raising guidance in the coming quarters, if not this quarter.
All right, we'll see what happens. Andrew Wolf, thank you so much joining us from BB&T Capital Markets.